Hey everyone, welcome back to Corporate Decoder. Today we are diving into a fund's shareholder report, which might sound boring, but stick with me because we'll uncover if this tax-managed fund is actually managing to grow your money or just shrink it slowly. This report gives us a peek into how the tax-managed multi-cap growth portfolio performed over the past 6 months. We'll look at where they invested, how much it cost to run the fund, and most importantly, whether it made any money or not. We're going to simplify some complex stuff because nobody wants to get lost in financial jargon. Captain, before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. This is a semi-annual report, which means it covers 6 months from November to April in this case. It tells shareholders how the fund did and what it was up to. Basically, it's a report card. There is a mention of a website and a phone number if you need to find more information, but let's focus on what we have here. This is a super important part, how much it costs to run the fund, also known as expenses. For every $10,000 you invest, it costs $35 for the 6-month period. This is equivalent to 0.7% annually. Think of it like this. If you put in $10,000, nearly $70 goes towards just keeping the lights on every year. Not great since that eats into your potential profits. This footnote clarifies that the expense of 0.7% is on a yearly basis. Here are some key numbers. The total assets are about $259 million, and the portfolio has 45 holdings or investments. The portfolio turnover rate is important. It measures how frequently the fund buys and sells its investments during a year. In this case, it's only 1%. This tells us they are not making frequent changes. A low turnover can be good if the investments are working, and bad if they are not. Now we see where the money is being invested. The biggest chunk, 40.9%, is in information technology or IT. This means a lot of the fund is betting on tech like computers, software, and the internet. Communication services is next at 13.2%, then consumer discretionary at 12.9%. Need. We also have healthcare and industrial, so it's heavily weighted towards tech with some investments in consumer goods and healthcare on the side. Here is a quick rundown of the top 10 holdings. Microsoft is at the top with 11.3%. Apple is next, followed by Amazon and Nvidia. Visa, Alphabet, Google, Meta, Facebook, and Salesforce are next. Finally, GoDaddy rounds out the top 10. This tells us that a large portion of the fund is concentrated in a few very big tech companies. If these giants do well, the fund should also do well. This part is empty, meaning there were no major changes requiring disclosure. This financial statement contains information about how the fund calculates its numbers and the rules it follows. It also mentions various small things like the fact that estimates are being used. It's all quite typical. This is a quite technical section. The investment advisor is essentially the company that manages the fund. Boston Management and Research is getting paid to make the calls on where the fund's money is invested. The fee is 0.65% annually on the fund's daily net assets. Again, remember that every percent like that comes directly from your profits. The fund bought $1.7 million worth of stocks and sold $2.6 million worth of stocks, which gives an idea of how much trading was done. This section calculates the fund's holdings based on tax rules. It's important for figuring out taxes when investors sell their shares. This section shows how much the stocks have improved or declined from their initial purchase for tax purposes. The fund can borrow money through a line of credit if it needs to cover redemptions, when investors withdraw money or other short-term needs. But note that no substantial borrowings or charges occur during this period. The fund lends out some of its securities to other institutions. It's a way to make extra money, but also carries risks. In exchange, it gets collateral like cash or government securities to protect itself in case the borrower doesn't return the securities. To ensure there is sufficient collateral, any loan securities are valued and rebalanced daily. The securities lending agreements have no fixed maturity date and can generally be terminated at any time. Here the fund invests in an affiliated money market fund managed by the same company It's a way to keep cash safe while still earning a bit of interest. This explains how the fund determines the fair value of its investments. It's a method to decide how much something is worth, especially when market prices are not readily available. Level 1 assets are straight up stocks. Level 2 assets are prices based on model, and level 3 is all based on fund's own assumption. Alright, let's take a look at the numbers here. Let's focus on the big picture. We are looking at whether this fund made or lost money for the 6 months covered. The fund's net assets decreased by about $11 million, but comparing to the previous year, the fund increased. Looking at all key figures, let's see if the fund is worth investing into. Its expenses are quite low at 0.7%, which is good, but there also was a 4% loss, so a little bit more work is needed there. Overall, looking at these numbers, it seems like this managed fund is riding the big tech wave. So if the big tech stops doing well, this fund will also stop doing well. Additionally, it seems like the costs are nice and low, but it really depends on the goals that the investors have and on how the fund will perform in the next few years. Alright, that's our breakdown of tax managed multi-cap growth portfolio latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.